Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. JC, great to be able to catch up with you. Always amazing to see you and that massive microphone. Okay, we got it. There's a lot to cover today, but let's first start with your big picture on the markets, especially given the fact that we've seen new highs being hit. So where do you stand right now when you look at the markets? Technically speaking, I should point that out. We're talking about technical analysis.
Yeah, for sure, which is really the only truth, Catherine, right? And that's why we focus on price, because we know price is never going to lie to us. CEOs lie to us all the time, or maybe they're just wrong. Sell-side analysts, again, wrong all the time or lying to us, right? There's humans, right? So it's just what it is. Price is never going to be restated, right? It's fact. So when we follow prices, prices trend. That's the beauty of it. That's why technical analysis works. Because what are we doing? We're looking for trends. And in the large cap space, a lot of these large cap indexes, look at Europe, look at the S&P 500, the NASDAQ, the Dow Industrials, and they are making new all-time highs. But when you look at the average drawdowns in the stock market, particularly in the New York Stock Exchange and the NASDAQ, the average stock is down over 20%. So when people are like, hey, JC, is the market going to enter a correction? The truth is the market's been correcting for over 6 months. You might not see it at the S&P 500 level, but when you look at the individual sectors and components, you've seen a ton of deterioration underneath the surface. Now, that doesn't change the fact that bigger picture. You look at the Euro Stock 600 index, which is a broad measure of Europe. You look at Japan coming out of major bases. You look at the U.S. Financials Index, major 14-year base. These are some of the most important indexes in the world that bigger picture are coming out of massive bases, right? That's super bullish. Now, that's bigger picture. When you break it down to what's actually happening, what's happening this year, and what to expect moving forward, I think further volatility, further chop, lower correlations among individual components of the market. So I think the big theme moving forward, Catherine, is winners and losers. You're going to get winners, and you're going to get a whole bunch of losers too.
Why don't we start with the winners? What's working?
Yeah, financials for one, broker-dealers making new all-time highs, the XLF making new all-time highs, JP Morgan, Goldman Sachs, Berkshire Hathaway, a lot of these capital market companies. You've got a lot of exposure in financials around the world. So you're seeing international markets outperforming U.S. markets for the first time in forever. You're getting an expansion in countries that are making new highs. A lot of that has to do with a lot of these countries around the world have a lot more exposure to financials and cyclicals in general, right? Commodities, base metals, financials, those are the areas that have been working. I'd like to point you to industrials. Europe has 3 times the industrial exposure to the United States, and all 20 stocks in the Dow Jones Transportation Average, all these transports are in the S&P industrials. So this is the most important sector in America. It has the highest correlation with the S&P 500 of all the sectors. And since May, it's gone sideways. So June, July, August, we're now in September. We're going on almost 4 months of sideways action in industrials. So if you want to know the direction of markets moving forward, follow that index. Currently, it's sideways, which tells us a lot about the market. Sideways, right? But an upside or downside resolution is going to tell us a lot more about global equity. So that's the one I'd be watching, XLI.
Okay, but when you reference the fact that the European markets have more cyclical or industrial exposure than the U.S. markets, what do I need to take from that?
Then it's not a tech-oriented market like the United States, right? Most markets around the world, pretty much every other one except maybe Taiwan, is more cyclical, more financials, more industrials, energy, materials, right? Commodities, a lot more exposure there than in technology, right? Which is why you've seen so much outperformance out of the United States for so long as these cyclicals struggled and technology was doing so well. These large cap growth stocks were doing so well for so long, you could really see the difference in returns between the United States and the rest of the world. But if these cyclicals are going to get a bid, first of all, that helps the international markets that don't have the tech exposure. And then within the United States, those cyclical areas like financials, materials, industrials, energy, those are interesting areas that we think can outperform moving forward. But I think it's going to be on a case-by-case basis. Right now, markets are still a mess.
A mess? That's a strong statement.
Well, the average stock is down over 20% off its highs. Small caps, micro caps, mid caps haven't gone anywhere in 6 months. The advanced decline line in the NASDAQ peaked in February, in the New York Stock Exchange and peaked in May. Until last week, we were getting more new lows than new highs. So yeah, I mean, I can keep going if you want, but all that to me screams messy market.
Messy market. I guess, does it scream anything in terms of watch out? There's a lot of downside risk coming.
I think a lot of stocks and sectors have already gotten hit. Like I said, the average stock is down over 20%, right? I mean, some would argue that that's a bear market, right? So you want to talk about messy markets. We've been in one for some time. Now, are the large caps now going to catch down to what the rest of the markets have done? That's certainly a possibility. Could we see some outperformance out of small caps, emerging markets, things like that? For sure. In fact, I think that's probably the higher probability outcome. More churn, more environments where there are some winners and there are some losers, right? It's more bifurcated as opposed to very high correlations like we saw last year, where when stocks got slammed in the first quarter with the whole COVID thing, correlation spiked. And then they all bottomed simultaneously and ripped into the summer and into the fall. So correlations were super high. Since then, we've seen correlations deteriorate. So it's more, I don't want to say stock picker's market because that's so cliche. It's always like that. But if we're going to use that term ever, this is the market where that term actually makes sense.
Okay, so we talked about some areas that are doing well, the winners. So the XLI, XLF. I do want to get your take, though, on tech, because that obviously has been the market leadership. But we've also seen some of the big cap tech companies that maybe up until a couple of weeks ago really just churn and turn sideways. And then now they seem to be resuming their upward trajectory. So where do you stand? Let's go through some of the FANG names, because I think they're some of the most popular ones in people's portfolios.
Yeah, Amazon, we're bullish. If Amazon is above 3,300, I think it's got upside. Apple as well. I want to get you an exact quote on Apple. I had the Apple right in front of me just a second ago. Here we go. We're looking at about $1.40. So if Apple's above 140, I like it long. But what's really interesting is the software space specifically. Look at Elastic, ESTC. This is a $15 billion software stock making new relative highs. If this one's above 172, I like Elastic long. Look at Avalara. This is a $16 billion software stock, AVLR. If this one's above 185, which will put it above the highs from earlier this year, I like that one long. And then one more software stock, Varonis Systems, VRNS. If that one's above 72, I like it long with a target up near 90. So software specifically within tech, I think is where we want to look.
And what about the semis these days? We've had some, positive news, but there's also been recently concerns about actually too much supply.
Yeah, well, I don't know about too much supply. In terms of price, maybe there's too much supply, but there's more demand than it. So that's why prices are going up. We're getting new all-time highs in semiconductors, which is definitely bullish. And our big winner so far in this new leg higher has been NVIDIA. So NVIDIA, I still think, goes to 300. That 210 level is the support. So as long as we're above 210, I like NVIDIA long. And I don't think you could just blanket just by any semiconductor. Same and software too, for that matter. I think there's winners and losers, right? So I think you need to be careful and be specific. And I think that market cap range between like 5 billion and 35 billion. I think that's the sweet spot, Catherine. I mean, listen, there's nothing wrong with these mega caps. We mentioned Amazon and Google and Facebook also pushing up against new all-time highs. So there's opportunity in the mega cap space, but man, don't forget about those mid caps. And I know historically mid caps are capped at 10 billion, but we made up new rules. That's a stupid rule. I think mid caps are more like 30, 35 billion.
Interesting. And to your point about don't forget about the mid caps, I think over the past, I don't know, 10, 15 years, there's so few mid cap money managers that the mid cap stocks don't get attention. There's a lot of large cap growth, not that many large cap value, and then there's small cap, but not a lot of the mid caps. So that's kind of interesting to bring it up.
And then my whole career, Catherine, the old timers, you want to listen to the people that got the battle scars, right? The more gray hairs, the more I pay attention. And, one thing they always told me my whole career was, JC, the biggest winners come from mid caps, right? Because the small caps are still kind of small, but once they enter that mid cap space, they can double again, they can double again after that, and it's still not that big. So you get huge winners from mid caps. That's always stuck with me. And we just changed the rules outright because this whole, when they came up with the rules that mid caps were between 2 and 10 billion, like we didn't have trillion-dollar companies back then. So, when we talk about inflation, if there's inflation anywhere, it's in market capitalization. So why don't we adjust our categories of capitalization for, market cap inflation, right? And mid cap is exactly that. And, a $5 billion stock is great. But to me, I treat a $5 billion stock and a $25 billion stock exactly the same. Those are mid caps, Catherine. We changed the rules. Deal with it.
Yeah, no, that makes a lot of sense. There's inflation everywhere. Of course, there should be in market capitalization as well. So you talked about mid-cap software names. Any other area that you really like for the mid-cap space?
There's some biotechnology stocks in mid cap. I don't want to mention any names in particular because I kind of like biotechs are very funky like that. So I'd rather stick in general. Look at XBI, the equally weighted biotechnology. If we hold last month's lows, I think you can own them. Let me point you to uranium. We're finding some opportunities there. And let's see, is Cameco considered a mid cap? Let's see, is Cameco considered a mid cap? Yup. So actually a traditional mid cap at 9 billion in market capitalization, as a matter of fact. So if Cam goes above 22, I like it long. I think it doubles. I think we get back to those 2011 highs. But if we're below 22, you leave it alone. But uranium popping up for sure in the whole commodity space with uranium futures making new highs. Uranium futures are literally making 5-year highs as we speak. So Camco is the bellwether there.
Yeah, I hadn't actually kept my eye on that. What are the steel stocks then looking like, or what within the commodity space? What else is looking interesting?
Well, the steel for sure, no doubt about it. When you look at even like the coal, right? They're part of the same story. New highs in coal futures, new highs in steel futures. I think steel futures are up like, I don't know, check my like 16 months in a row or something ridiculous. 14, 15 months. The point is, steel futures have just not looked back. Same thing with aluminum, I might add, and tin as well, making moves. Nickel continues to act strong, but we've seen corrections in things like rebar and iron ore. There might be, because these are Asian futures markets, so there might be something there with China. But that whole space, and when you look at the Baltic Dry Index, also making new, I don't know, 13-year highs or something like that. Where's the Baltic Dry Index? It just continues to make new highs. I don't have it right in front of me. Just take my word for it. It's absolutely crushing it. What does that mean? That there's an overwhelming amount of demand to ship raw materials. People are trying to build stuff, Catherine.
Yeah, I know. I know. Well, a lot of us are at home still. Are you?
I am at home. We have our office in the city. I was living in California for a long time, so I worked from home, even though we have a New York City office, and now I'm about an hour from New York City, and I work just as much from home. I go into the city once a month, a couple times a month maybe, but it's mostly, to have dinner with, friends, traders, portfolio managers. I mean, I'm going to, a Korean restaurant in 3 weeks in New York City, for example.
That's
I'm sure we'll get
exciting.
business done, but we'll probably rack up a nice tab as well.
Yeah. Well, and as everyone's at home, everyone's just like looking around their house trying to make it a little bit prettier or what have you. So yeah, you're seeing major demand. That doesn't seem to be abating. Let me ask you this though, since I think I've got a lot of Canadian followers. What's oil looking like? What's WTI looking like? Or
Yeah,
even nat
so
gas?
yeah, the 2018 highs in crude oil was our target, which was $76. So as soon as crude oil hit $76, that's it. All bets are off. Targets hit. So now we're stuck in a range between about 66 and 76. How long do we stay in the range? Probably for a while, right? I'm
Hmm.
not going to be in any rush. I think you buy a breakout in crude oil above 76, and that's the leg to 100, and that's where I think we're going back to 100. I
Do
just
you?
don't. Definitely. I just don't want to be long oil if we're below 76, right? Because we're still below overhead supply. So what's happening right now is that demand is absorbing that supply that's been in place since 2018. And the market has proven that over the last couple of months. So as long as we're stuck below 76, I don't think there's a trade there. I think you leave it alone. But once we break out above 76, I think you buy the breakout and we go to 100. And then
Do you?
natural gas is
Yeah.
almost at our target now, right about $5. The trade was be long if we're above a buck 90, right? That was
Yep.
last year. And then natural gas has been a great trade. We're quickly approaching our target, which were the highs from 2019. As soon as we get there, there's probably trouble, right? Right under $5. And, you feed the ducks. Now it's somebody else's problem.
And then what do you think as a follow on the Canadian dollar? If you really like, we're often viewed as a commodity currency, we're range bound now, but if you think that WTI is going to break out above 76 to $100, is that anywhere reflected in the Canadian dollar? Probably not at this point.
Definitely. You got to take out the summer lows in dollar CAD, right? So CAD's got to break out to new highs, essentially, right? And if we break out to new highs, I have a funny feeling the oil breakout and the CAD breakout is probably going to be within a few days or a few weeks.
And you're expecting that to happen.
I am. I just don't know how long it's going to take. And based on what I'm seeing, it's probably going to take a while. It's probably not going to be tomorrow or next week. It's probably not even going to be next month. Maybe towards the end of the year.
Okay.
I mean, listen, maybe sooner. I don't know. Set your alerts, right? When CAD makes new
Yeah.
highs and or oil makes new highs above 76, make sure all your bells and whistles are going off. Like, it could be tomorrow. I doubt it. It could be next month. I doubt it. Gun to my head. Unfortunately, I don't have a gun to my head. I could just be patient. I'm not going anywhere. Like you said, I'm stuck at home. Where am I going? So, it could be, like I said, it could be tomorrow. It could be next month. I don't think so. Probably in the fourth quarter at some point.
Okay. And JC, within the FX world, what else are you looking at as it relates to the US dollar? Anything in particular?
Yeah, I mean, Kiwi maybe, right?
Yeah.
Kiwi, that's probably one that stands out. If Kiwi's above 69, right? So when you're looking at a chart of Kiwi dollar, that 69 level's probably the one. If we're above 69, you could probably buy it to get back up towards 73. We've seen a bounce in Aussie yen. That's another interesting cross that you probably want to keep an eye on. It tends to move very highly with risk in general. When Aussie's outperforming yen, risk assets are probably doing well. Stocks, commodities, right? When Aussie yen is rolling over, like it has been for the last 4 or 5 months, we talk about the market being a mess. Just look at a chart of Aussie yen. There's your market mess.
Okay. And just to take a look at Europe again, just kind of go back there for a moment. What are you seeing in Europe? Is there an opportunity?
I think it depends on your time frame, Catherine, right? If you look at the Euro Stock 600, I sent you guys the chart, and you zoom out, Europe went the Euro Stock 600 is just a broad measure of European equities, the broadest measure as far as I'm aware. But essentially, you're looking at 600 of the biggest companies in Europe. It's good enough. The point is, it peaked in 2000 and then did nothing for 20 years and just broke out now. So, from a structural perspective, I mean, there's just nothing more bullish than action like that. See very similar behavior in the XLF and the US financials, 14 years versus 20, but same idea, big base. Europe peaked in the tech bubble, financials peaked in the great financial crisis bubble, but they both broke out at the same time, resolving above those levels. So bigger picture, man, hard to be more bullish, but that doesn't have any impact in what's going to happen over the next couple of months which my suspicion is more of a mess. And you want to pick your spots, right? Not all financials are doing well. Regional banks, for example, have been struggling, right?
Yeah.
Broker dealers and the exchanges have been doing well. So I think that's the story, Catherine. If there's any story at all, is winners and losers, not winners or losers.
Got it. Let's take a look at cryptocurrencies and Bitcoin. You were the one who wanted to talk about it. I always love talking about it, but it was interesting that you brought it up.
Well, I mean, listen, you got to give the people what they want, Catherine. And the people, they want to know what's going on in the crypto space. You know, you're getting all-time highs in volume, in things like OpenSea. You know, everybody's talking about Solana. Solana continues to make new highs. That has been an absolute monster for us. So now, you know, we have some volatility now post-Labor Day, you know, coming in. Now the big boys are back from vacation. You know, I'm looking at that Bitcoin around 46,000. Bitcoin better hold 46,000 or that's going to be a big, big problem. Cardano needs to stick that landing around 240, 250. If it can, I think that's bullish. I think you buy this dip, but I think you only buy this dip if Cardano's above 240, 245, Bitcoin's above 46,000. If those two are in place, I think those are big. And then reference to spring highs. I like to own the cryptos that are above their spring highs. The ones that are not are showing underperformance. But if they're above the spring highs, I like them long.
Okay. With respect to interest rates, are you looking at the US 10-year yield? Do you have a feel for where that's going next? Just because we want to keep our eyes on what the real risk-free rate might be. Who knows?
For sure. 1.4 on the 10-year yield. I mean, it's binary. You know, 1.4 was the 2012 lows. Those were also the 2016 lows. They were the 2019 lows. And then we broke last year, which is, if you recall, I was on your show. We were talking about just how bearish we were. A lot of that had to do with interest rates breaking down, because if interest rates are coming out of, you know, breaking 10 years worth of support, how are stocks probably doing in that environment? Our suspicion was they probably weren't doing too well. And then sure enough, stocks crash and there was a whole virus and the whole thing. But I still don't know anything about any viruses. But the bond market is very, very smart, and we want to trust the bond market. So, you know, the one missing ingredient for risk assets to do well, crude oil to break out above 76, industrials to break out above this 4-month base, for that to happen, you know, it would be a lot easier if the U.S. 10-year yield was above 1.4. It is currently not. We're right there. We're flirting right there with it. So that's something to watch now as we enter September. Definitely.
So you're saying what though? You're saying that 1.4 breaking out above that is going to be positive for risk on assets.
Correct.
Okay. Do you see, you know, if we went back only a few months ago, do you see that if it climbs too fast and goes further than people think it should, is there a risk there? Like, is it a range for you?
Yeah, that's the whole thing, right? So as long as interest rates aren't going crazy, it's not a bad thing. To your point, you know, what traders don't like, it's not that they don't like, is that, you know, they panic when interest rates are moving too fast, because the bond market is so big that the unwinds of these massive bond positions infiltrate other parts of the market, particularly stocks and commodities. You know, these unwinds, because these markets are so massive that these institutions have their fingertips in so many different areas. So as long as interest rates aren't moving too fast, it's not the end of the world. But to your point, higher or lower, either direction really fast, you know, makes markets have a heart attack.
Yeah. And just lastly here, any thoughts on the Canadian market? And it is, you know, so much of it is tied to WTI, to the commodity complex. I don't know if it's hard to have one broad view of the TSX, I think, from a technical perspective, and you probably have to be even more specific here in Canada from a sector stock perspective than even in the United States. But what do you think?
Yeah, we just hit our target in the TSX. So, it's, you know, literally 20,700. That's the target. If you take the high from 2000 down to the low in 2003, the 161.8% extension to the penny is the 2007, 2008 highs for the TSX. Then we consolidated for 10 years. We just broke out last year. And what's the 261.8% extension? 20,700, which we just hit. So, you know, realistically, it's hard to really press bets in Canada right now. You got a lot of exposure to energy and financials. So just something to keep in mind. If oil's stuck below 76, how good can Canada really do? So you got to lean on the financials and the industrials for that matter. Industrials are trading sideways. Financials are, kind of stuck below the spring highs, and energy is, just a mess. So how good can Canadian equities do in that environment? I would argue probably not very good.
Okay. Well, that's an interesting note to leave it on. So I will add one more question or what have you. JC, talk to us a little bit about how people listening can access your knowledge, your insights, etc.
Yeah, so I'm incredibly fortunate to be able to speak to some of the smartest traders and investors in the world every day. Right? Not a day goes by that I don't talk to somebody who's way smarter than I am. And we have a great team internally as well. In 6 different countries, right? We've got analysts and traders in India, New Zealand, Moscow, Venezuela, all over North America, Canada, Poland, right? So, because of all of that, I get great perspective just on my own team, not to mention, all of our clients, these are individual traders to the biggest institutions, portfolio managers, and banks in the world, in Switzerland, all throughout Europe and Latin America and Asia, in Mumbai, in Dubai, right? So all over the world. So it's really, really interesting, the information that I'm receiving on a daily basis, not to mention that I'm ripping through about 5,000 charts a week. So I really think I bring good perspective that we can then drill down into individual opportunities to buy or short stocks and commodities and cryptocurrencies and, ETFs. And we're able to help investors of all kinds, from individual investors to financial advisors to major PMs all over the globe. So if you go to allstarcharts.com, you can check out all of our content there, and find us on YouTube at Allstar Charts, Twitter, StockTwits, Instagram at Allstar Charts.
Okay, awesome. Well, that's a great note to leave it on.
I think so, Catherine. And listen, I'm always going to tell you how it is. I'm not going to sugarcoat it. Sometimes people don't want to hear what I have to say because they might not want to hear that because they have exposure in a different way.
Sure.
But I'm going to give it to you straight, Catherine, every time. That's a promise.
I know. And we've never met. Well,
we did once in Toronto.
We did once in Toronto, the first
Studio,
time.
kind of.
What? That was a long time ago.
Agreed.
Okay, so I'll see you when we come to New York.
Yeah, Thai food on you.
Okay.
And then we'll go to sushi on me. Deal?
Sure. I like sushi better, I think, though.
Who doesn't?
Okay. You know what I really love in New York is the Duck House.
The
Peking Duck. The Peking Duck House.
Down in the Village, right? In the East Village?
No, it's Midtown. It's like on 50th.
I try not to hang out in Midtown.
Oh, sorry. It's not cool enough.
It's definitely not cool enough. I mean, if I'm going to go in the city, I'm going to go down in the Village. I'm not hanging out in Midtown with a sweater vest on. No, thanks.
Okay. Okay. I'll see you in the Village.
Hell yeah.
Okay.
We'll
Thanks,
go to
JC.
Japonica. It's beautiful. It's the best sushi in town.
Perfect. We'll do it sooner than later.
Catherine.
Okay. See you later.
Bye-bye.